Guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about 6 years worth of trading advice from a full-time trader. My name is Carter. I've been a full-time swing trader for over 6 years. And with that being said, we do have an amazing school where I teach people my strategies, my mindset, how I find undervalued stocks. It's a one-stop shop for all of your swing trading needs. Check it out down below. And we're doing a back to school day sale where you guys can get 50% off just by signing up. So check it out down below. You won't regret it. You guys can use code SCHOOL, 50% off. We got private live streams, quizzes, lectures, everything. If you want to take trading serious, check it out. But guys, let's dive into the 6 years worth of advice. So the first thing that I want to talk about here is going for base hits. And we're not playing baseball, but what we're doing is not shooting for home runs. With trading, you'll see a bunch of opportunity, and some of these stocks here that you might be looking at, people will be saying, "Oh my gosh, buy this stock for 20 cents, for $1. It's going to go to $1,000." No. Most successful swing traders or even traders in the market, they're not going for these massive returns of 100%, 200%. If you try to do that, your risk tolerance is going to be out the window and you're going to be burning through your accounts. Now, what a successful trader does is they might buy a stock at $10 and sell it for $10.20, but they just do this consistently. Taking those 1, 2, 3% returns and just compounding it over the course of a year is a great way to, one, grow your account, build up confidence, know a strategy that works. And the cool thing about trading is the profits you make today can be used as leverage tomorrow, so you'll compound your accounts a lot faster than just general investing. The second thing that I want to talk about here is don't be afraid to cut your losses. And when you're right, don't be afraid to buy more. When I always think that when I'm wrong with the stock, I'm wrong. And a lot of traders will have the mindset of, "Oh my God, this stock's going to the moon. I'm buying it no matter what. I'm holding this thing." And what happens is they're wrong. And so the stock slips down. And then it goes farther and then farther. And before they know it, they've lost a lot of money compared to realizing, okay, well, I'm wrong. Let's cut my losses and move on to other opportunity. With the stock market, there is always opportunity to make money. And it's our jobs as traders is to find that opportunity. So, just cut your losses. But then when you're right on a stock and maybe you see some sort of breakout or the stock's squeezing up a little bit, don't be afraid to add more to it. And, when you're wrong, you're wrong. And when you're right, you're right. And go heavy in on it. Don't be afraid to do that. And another thing here, piggybacking off that, is don't focus on profit, at least starting out. I know for me, at least when I was making that transition to becoming a full-time trader, I was really, really looking at profit because I had bills to pay, right? We all had bills to pay. So I always felt like, one, I had to either be in a trade, I had to, I always focused on profit and profit and profit, comparing just to focusing on my strategy, focusing on my checklist, and just making sure that I'm always choosing quality over quantity. A lot of traders think that they need to constantly be in trades and constantly be in positions, when reality is, I know a lot of traders and a lot of investors that just buy a stock a month or a stock a quarter or trade a stock a quarter, So everybody has a different approach, but just make sure you're focusing on the quality aspect and not quantity. So now that we talked about some tips and tricks, let's talk about some of the strategies that work well for me. So the broker that I'm using here is Moomoo. They're absolutely fantastic and one that I would really, really recommend. If you guys want to sign up, you guys can get up to 20 free stocks just by signing up. So for me and my approach, the first thing that I want to look for here is an upward trend. I always imagine the stock is like a river. I know I've said this before, but I think it's very important because trends are like the easiest thing a trader can look for. All you got to do is look for the stock going in the upper right-hand corner of the chart. That's pretty much it. Now, trends, like I said, it's like a river. So what that means is it's a lot easier to swim with the river than trying to swim upstream. So, at least for me, I'm a long trader. So meaning I buy and I try to sell at a higher price, there's going to be traders that are short traders, so they're betting for the stock to go down. But for me, I keep everything as simple as I can. I love the expression MISS, MISS, make it simple, stupid. Don't overcomplicate it. For me, you'll never see me with like 30 charts on my screen and 30 indicators. I keep it basic. I keep it under about 3 to 4 indicators just so I can get a general idea of what's going on. So with this stock MCK here, the first thing that I always look for is the upward trend. The second thing is some sort of support. So support could be a lot of things. It could be a certain price. It could be an indicator. With this stock here, ticker symbol MCK, you guys will notice here, let's remove those and add these back. You guys will notice these blue and red lines. These are what we call moving average lines. So you can actually see in the past where it hits them and it gets good buying pressure at these lines, right? It hits them several times, buying pressure, buying pressure, buying pressure. Hits the blue one, it gets a lot of good buying pressure there, right? So now looking at this, you can see that it acts as very, very hard support for the stock. And support is just where we get tendencies of getting buying pressure. Now, if you want to buy this stock, where would you want to buy it? Well, you'd want to buy it as close as you can to these lines. So now looking at it, you can see that the stock sold off here due to a bad earnings, sold off a bunch. Now, how do you know the stock's not going to just continue to sell off? So one of the indicators I look at is the RSI. So the RSI was trading for a 26. Now looking back, the last time it was trading for a 26 was back in here, where the stock went from 327 to about 474, which might not seem like a big move, but that's 13%, and I'll take 13% any day of the week. So now as we go back here, looking at this, we don't want to just buy random companies, right? So we want to make sure the stock we're buying is going to not just kind of continue to sell off as well. So we know the RSI is good. We know it's on a support. We know it just released an earnings. For me, I never hold through an earnings. And here's some examples. Looking at like NVIDIA, you can see here, let's pull it up. NVIDIA sold off due to bad earnings. Look at ticker symbol BJ, sold off due to bad earnings, right here, sold off, and we took a nice trade from here to here, and we just sold before the earnings. So you always got to make sure you got that in your checklist. The next thing is go to the hourly and try to find some sort of trend or support. So you can actually see where the stock did find some really hard support here, hits it several times, got good buying pressure, and honestly, the average cost that we have is near and around this 545 range, right in this range where it hits this and getting good buying pressure. And all you got to do is just set your stop loss just below it. So the risk and reward's really good. So let's go ahead and draw that out. And this is why I love Moomoo, because they're a trading broker and you can actually plan out your trade. So if we set our target back up here, your target's always going to be like in a dream situation. Where would the stock go to? A very realistic resistance line. Then we set our stop loss below the lowest wick here at about 3, right here we have it at 327, which is a little bit below the 331, that low wick right there. So now the risk and reward is 4.7. So risking $1 to make $4.74, which is awesome. So as a swing trader, we're always constantly working on our checklist. We're building up confidence. And if you're just starting out, I would highly recommend doing a couple of things. One, checking out our course. If you want to learn how to find these undervalued stocks, check it out. We're doing a 50% off sale, code SCHOOL, 50% off. Click that link right now. Click it down below. You won't regret it. The second thing, sign up for a trading broker. I love Moomoo. Now there's a bunch of them out there. I'll put them down below as well. But just start that process. Start that process of learning, of paper trading, using simulated money to practice, and you guys will be in a great spot. So guys, I hope you guys all enjoyed this. More importantly, I hope you guys learned something. If you did, hit that like button, subscribe, and I appreciate you guys hanging out with me, and we'll move on. And I hope you guys have a great rest of your day, and take care.